Sir Peace and all good. First question is explain what is a credit instrument. A credit instrument is a written document that contains a commitment or an obligation to pay a certain amount of money on demand or on a future date. It acts as legal proof of a debt between a borrower and a lender. Credit instruments facilitate financial transactions that produce trust and commitment to pay. And question is, what is credit instrument and its importance? Credit instruments are formal documents that embody a commitment or responsibility to make a payment of a fixed amount in the future. Example of credit instrument is a credit money, commercial credit, and investment credit, all of which have the potential to be transferred during the credit transaction. The importance of credit instrument lies in the facilitating of borrowing and lending, and thus the acceptance of credit at a future date when it is safer and more certain for the parties involved. Credit instruments help to establish confidence, enhance trade and transfers, and potential contribute to the economy as a whole. The question is enumerate the classification of credit instrument and be able to elaborate each class. Credit money. The function of classification of a credit instrument is the credit money. Credit money refers to a money that does not hold value in and of itself but is used as means of payment because it represents a promise to pay in the future. It is formed the promise to pay, and the instrument is credit government money. Credit a government credit money issued by the government book by trust, not by gold. The bank credit money is money created through banking operations. And the open book account record of debts from continuous transaction. Promissory note, a written promise to pay a specific amount at a future date. And collateral note, a promissory note secured by collateral. And commercial letter of credit, a bank's guarantee of payment to a seller on behalf of a buyer. And traveler's letter of credit, a credit issued by bank for travelers to withdraw money abroad. Next is the function of credit instrument is commercial credit. Commercial credit is a type of business to business or business to customer credit extended to enable the purchase of goods and services with an agreement for later repayment, like for checks. Checks is orders to pay from a depositor's account. And there are two types is a personal check and cashier's or manager's and treasurer check. Personal check is issued by individual and cashiers or managers or treasurer check banks issues and guarantees the check. Cashier cashier check when the cashier of a bank in his official capacity draws the order against the bank funds, and it's called a cashier check. A manager check is when the drawer is company manager, the funds belong to the company. The treasurer check is when the drawer is the treasurer of the organization, be it a bank, a commercial firm, or a mutual benefit association, and the funds against which it is drawn is owned by one of the organization. Uncertified check is a personal check verified by the bank that funds exist. And traveler's check is prepared check used while traveling. Second a form of commercial credit is draft. Draft is written order by one party directed another to pay. There are there are four types or five types. There are five types draft. Money order. Money order is order for payment issued by a bank or post office. Bank draft is a check drawn by one bank on another. Trade or commercial draft is a seller orders buyer to pay at a future date. And sign or demand draft is payable immediately when presented. Time draft naman, payable at a specified future date. The last classification of credit instrument of their function is investment credit. It is formed by promises to pay or evidence of ownership in a corporation. There are types of investment credit is trade, bunkers, bonds, long-term notes, stock certification, and stock right. For me, the investment credit is a type of loan or financing given to people or businesses to pay for long-term project like starting a business, expanding a business, or purchasing equipment. That's all, sir. Thank you.